Hey guys, hope everyone has had a fantastic week. Welcome to today's session of Market Snapshot. My name is Samson Mzera, and I will be taking you through this session. So, we've had a week packed on news. Again, if you can hear me as usual, say hi in the chat section so that I can know that you're together. In the meantime, last week I was to give out links for Zoom sessions. I was a bit held up, but everyone who DM'd me, I sent out links for the Zoom session classes. So that's something you can look at. Again, there's some construction going on. So if you can hear me in the background, if you can hear me, that is, just say hi in the chat section. Okay, so we'll go through what transpired this week. Then we will get to, so where we were last week is very similar to where we are this week, and I'll explain why in a few minutes. So let's go to our calendar first, and then come back to our charts. So again, hi Lemuel, hi CEOs, KE, hi Francis. Yeah, so let's have a look at these markets and see how you're going to play them. So this week, the main event was CPI. Let me just move this. The main event this week was CPI, and it came out. This is how it came out, basically. Yeah. So when we are talking about news analysis, and this is something I usually emphasize, it is good to gauge it based on expectations of the market. Yeah. And so from the onset of the week, people were expecting a higher inflation reading. So the expectation here was 0.6 and the expectation here was 3.6. Yeah. And then we usually emphasize that it is possible to trade expectations even before the news comes in. So if people are expecting inflation to be higher, then definitely there's going to be guys wanting to take action before that day. The same way, let's say there's a road somewhere and you hear that there's going to be a construction there, a parcel of land somewhere, and you hear that there's going to be a road passing there, then whoever is selling to you that parcel of land is going to include that statement, and the prices are going to go up even before that road is actually constructed. Yeah, it's the same thing with news. Usually the expectation can drive the market before the news actually happens. And in this case, you can see that from Monday, when the figures came out for the expectations, immediately the market started trending in the direction as though the dollar was strong. So if you have a look at the charts, and this is going to tie, it's a very important point because you're going to tie it to next week's expectations. So if you see that next week there are certain expectations, the market is already going to start positioning itself that way. So when you get to the charts, all the way from Monday here, all the way from Monday, and I'll exclude Euro USD for now because we had news also on Euro. But if you look at something like gold, all the way from Monday, which was, so let me just remove this over here and put it here. So this was Monday. Yeah, so Monday, Tuesday, Wednesday, Thursday, today is Friday. Yeah. And basically, the market started trending from Monday as though the actual was going to be a strong dollar. So from Monday to Wednesday, when the news was announced, we had a downtrend because everyone wants to get into the market before. That's the anticipation. And that's what happened. So going back to the road example, if on the actual day of the construction, you find out that maybe there are two roads instead of one road being built, then that is akin to having a higher reading than they expected, and prices are going to go up even higher. When the announcement comes in that they're constructing the same number of roads as expected, then prices won't really change by that much. And that's what happened here. You had a slight, if you go back to this here, if you go back here, first off, CPI came in line with expectations. That means we're expecting 0.6 and it came in at 0.6. Year on year, the year on year figure was at 3.6, came in at 3.7. Yeah. So that means people were expecting a high reading, and indeed a high reading came. Although for yearly and for core, it was higher by 0.1%, but it was still in line with expectations. Yeah. That means by the day the news is actually being announced, the market has already priced in that you're expecting a higher reading. So the only time it will have been a different or a strong reaction is if you didn't get the numbers as expected. So that's why in this case, when Wednesday came, and this was Wednesday over here, let me just take this. This was Wednesday, yeah. We just had a spike and then a brief continuation of the downtrend. Yeah. So typically you can trade the expectation even without trading the news. Yeah. And you can trade during the news and you can trade after the news. So it's all about what style or what strategy you're using to trade the news. Again, if you want to understand what we've just talked about, you can just rewind the video and then just go through it slowly. So let's go back to our calendar and talk about the other major event that came out this week, and that was the ECB interest rate decision. So later yesterday, we had this, and that's going to go back to my point of expectations. Later in the day, or later on Thursday, we had where is it? Yeah, these two. Main referencing rate and monetary policy statement from ECB. Yeah. And then, of course, usually in the press conference, they just read the policy statement as it is. And that's this press conference over here, this one. Yeah. So if you open this, you get to this point. First, before we get there, you can see here that they increased, the expectation was 4.25. Yeah. But they increased it to 4.5. But if you look at Euro USD, the reaction was different. If you come here to Euro USD, because you're expecting a higher reading, number one, Euro should have been stronger, yeah. But the question is, why now did we have this drop? So yesterday we had, yesterday we had this drop over here. Now that becomes a question for us to answer. Why did we have a strong drop when interest rates came in higher than expected, and it should have been stronger for Euro? That's number one. Number two, the other question you need to answer is, why do we have a sideways trend when the dollar is strengthening? That's the other question. Yeah. Now, let's start with the sideways trend before we continue to yesterday's reaction. So again, the market was expecting the ECB to be very hawkish, meaning they're going to say statements that will imply a strong Euro. So from the start of the week, Euro was kind of defending itself because Euro became kind of strong and dollar is already strong. So instead of it trending lower, it started trending sideways. Yeah. That was the expectation from the ECB statement. Yeah. Now, that explains this. So Euro was gaining and dollar was also strong. So they kind of balanced each other out and we had this sideways trend. However, it still doesn't explain this sharp move over here that was caused by yesterday's news. Okay, so what moves the market is expectations and not the actual announcement. What moves the market is expectations and not the actual announcement. Yeah. Now, if we are in an environment where we are raising interest rates, yeah. So in an environment where you're raising interest rates, and then you see that, for example, now the ECB has come in and has raised it by 4.5. This is already one of the highest levels of interest rates on record. You see, from 2050, the interest rates have never been this high. So now the market is asking, what is the probability of us having another interest rate hike, considering they're very high at the moment? But that doesn't answer the question fully. What answers the question fully is on this monetary policy statement here. Yeah. If you go to the actual statement, This one, it's a very long, it's not very long. The Fed ones are usually longer. So on this statement here, of course, they've talked about inflation and how they expect it to increase and all those things. But if you come to this point, based on its current assessment, the Governing Council considers that key ECB interest rates have reached levels that, maintained for long duration, will make a substantial contribution to the timely return of inflation target. So that is simply saying, if we maintain interest rates where they are at the moment, chances are we'll now start seeing over time inflation coming back down. Yeah, that means there's a very low likelihood of these guys coming again and raising it even further. So this was the one statement that spooked off the markets with the possibility of another hike. So chances of us having another hike might be slimmer. Yeah, and the market runs on expectations. We already have this hike coming, but what's going to be the next hike? That's what's going to move the markets. And the expectation is, because they've raised this time, they might not raise next time. Yeah, it's true that interest rates make a currency stronger, but that statement doesn't just end there. It's based on expectations, as we've discussed. Yeah, if you're expecting interest rates to continue going higher, then I'll continue buying the euro in anticipation that in future it's going to yield me more. But if I expect interest rates for the euro to stop, then it doesn't matter what the current interest rates are. Yeah, to stop rising, that is, doesn't matter what the current interest rates are. And that's what this statement here is saying. Based on its current assessment, the Governing Council considers that key ECB interest rates have reached levels that, if maintained for sufficiently long duration, will make a substantial contribution to the return of inflation, to the timely return of inflation to the target. Yeah, and that's why instead of us seeing the euro go up, we saw the euro going down over here. Yeah, so we had a slight reaction because, of course, it came in as a higher reading, but afterwards we had the market move lower. Yeah, now what's the overall trend for euro USD? We resume our downtrend, and I have so many lines here. Let me just clear everything. So we resume our downtrend, although we have key areas to watch out for. And the first area to watch out for is that point. Yeah, so we've reached a resistance support point. You might see a slight retracement, and then we continue. Now, what can cause that continuation is a question you should be asking yourself next. Okay, let's go to our news and see what are the expectations for next week. What do we have next week that's going to move the market, considering now that we know ECB might not likely raise in the next cycle? Yeah. And this is tentative on what happens also next week and further comments. So let's move here to this point. Yeah. So the dovish hike, they're calling it a dovish hike because they've hiked. Yes, hiking is hawkish, but at the same time, it signals that they might not even hike again. Yeah. So here they're saying data from the US is strong, of course, and those are signs that we might see the Fed, or the central bank in the US, continuing their trajectory. So with the ECB meeting now past us, market attention will shift to next Wednesday's FOMC announcement. Evidence of slower disinflation has provided an incentive to keep one hike in the dot plot projections for the end of 2023, while resilient US data may see a revision higher of 2024. So these dot plots are usually just projections for interest rates. We doubt that sort of adjustment would come as a shock to the markets, but will further discourage bearish positioning in the dollar. So what they're simply saying is, at the moment, expectations for the market is the Fed might likely continue in the current trajectory, maybe with one more hike towards the end of the year. Yeah. They're also saying that things are still inclined to a strong dollar. And that's why it will discourage bearish positioning on the dollar. Very few people will be willing to sell the dollar going into the year. That means the dollar looks highly unlikely to be weak. Yeah. Having said that, let's look at next week's calendar while we are on this topic. If you go to, even before today's, let's go to next week. So it's important to interpret any information or any news based on context. You don't just see that it's blue or green or red and that's it. You need a bit of context, like that interest rate decision example. So this is what we have next week. The market is expecting, of course, the Fed to maintain its rates, its current interest rates. Yeah. And then they're saying here, we're going to have a statement and all these things. But when it comes to these sorts of interest rate decisions, the important thing will be this, the FOMC statement. Remember, this is what caused the euro to drop yesterday, not the actual interest rate decision. And this is what we'll be focusing on. Yesterday, I tried plugging in ChatGPT to read for me the statement, but it didn't do quite well because it was saying bullish euro. But you can always access the information or the statements when they are released by clicking on that link. It will take you to the most recent statement. You can practice by going through these statements, and I think if you practice enough, you'll kind of get the hang of it. When they're saying it's hawkish, those slight remarks they make are very important. So yeah, so this was the previous statement was on July, and now we expect a statement here. So you can go through the July statement, PDF statement, and just sort of understand what they're looking at. And these are mainly things that now move the markets, what they're concerned about. Yeah. That's why we don't always trade everything we see on the news or on the calendar. We trade what they are concerned about in this statement. So if you open this statement, there's quite a lot you're going to learn. So you can read one statement and the other and then just try and interpret the meaning. If you can't, then you have to do your research, and it's going to help you build the knowledge on how to do fundamental analysis. Okay, so expectation is there is very little reason to discourage a strong dollar for the next week. Technically, though, we still have to position ourselves appropriately in terms of analysis on the chart. Yeah, it means, yes, we know the dollar is going to be strong, but that doesn't just mean go and sell euro, go and sell gold immediately. We have to look for optimal entries to guide our judgment for that. So let's go to this chart and look at euro. Euro, you already looked at it. So for euro, my play will probably be, I'd want to see a retracement. So here we had a small flag pattern, it's a bearish flag or something. And then we just broke out. Okay. Had a small flag pattern like that, and then we broke out of it. So what I'll be looking for is, I'll be waiting to see if we can come back to this area here. If we can manage to come back to this area and we feel this imbalance, then it can be a good place to start looking for selling opportunities to the downside. Yeah. Obviously, if you're doing this, then this is the H4 candle. So you'll have to use a smaller time frame candle, use your technical analysis, and obviously have tight stops and use risk management. But this is what I'll be trying to see. The only thing that will be concerning is that we are on a major support. So it might have a somewhat of a hard time getting through, but if we get through, that's a good thing. We will continue. We will continue lower up to this region. In the event we break this region smoothly, and we have a good flow of momentum downwards. Yeah. In the event we see resistance, then we'll be looking for selling opportunities higher up on this trend. So in this case, in the event we fail to come to this point over here, then another good area to look for selling opportunities will be here, because we have another imbalance here and way up here and up here. So an easier way to do this will probably be to plot a FIP, but it still depends on your levels. And yeah, I think this one we just have to leave it to technical analysis. As long as you know what the general flow of the market is, you are good to go. Okay, that's that. Gold also straightforward. Either this region over here or this region over here or way up here, but mainly this region. If we don't see any opportunities on the lower time frame, then we can wait for it to go higher. But it's coming up with a very good setup. We have an imbalance, so there's more reason for it to start going lower, although you still have to do technical analysis to verify this. Yeah, the other place that gold is likely going to retrace to, in the case continues going higher, probably be this area up here. So those are two areas that you can look for selling opportunities, but again, use your analysis to just confirm these entries. Yeah. And what is the market saying about this, or what are the fundamentals saying about this? Let's tie in gold with commodities and oil while you move there. So let's talk about commodities first. Oh yeah, let's talk about gold first. So gold prices came under pressure. Let me just zoom this in. So yeah, it's saying gold prices came under pressure yesterday after US inflation data. Yesterday we also had inflation data on, I think, PPI, and it sort of added momentum to the dollar strength. So there's more reason to believe that we might continue seeing this happen. And anytime gold makes a move higher, then if it leaves imbalances, then those are even better opportunities to look for areas where sellers can get in. Yeah. Okay. So I think we've talked about gold, euro. For pound, it's the same thing. Usually, for pound, they have this sort of if the East Coast, they're neighbors with the UK. So if with the euro, the eurozone. So if the eurozone we have hawkish statements, then this might also affect England. And if they have dovish statements, then this might also affect the BOE, Bank of England. Yeah. So yeah, they're saying sterling followed the euro lower against a backdrop of a broad-based dollar strengthening yesterday, and cable was heavily tested at this area. A dovish tilt by the ECB likely added fuel to the ongoing dovish repricing of the Bank of England expectation. So again, the market is saying because ECB, we don't expect more hikes from them, then chances are we also won't expect a lot of hikes or more hikes from the Bank of England based on probabilities, of course. And that's why both of them trended lower. Yeah, yesterday. Although now euro is trending more strongly than pound in terms of weakening. So that's one thing to look out for. So if I was to go to the chart for euro, for pound, sorry, let me switch this to pound. So GBP USD, those who are trading GBP USD, the story is the same. Although here you have a very balanced trend. So in terms, from a purely technical perspective, this is a very stable trend. This is also balanced. The only thing we have here is there's a small fair value gap here. So there's a small fair value gap over here. Although I don't think the market will go all the way up unless the news that's coming today at 3 is going to affect this. But overall, we do have a downtrend, and we can keep so let's just zoom in this. Yeah, so overall we still have a downtrend and looking for retracements and continuing with the trend. So an easy way to do fundamentals is if you can explain why you're seeing a trend using fundamentals, then there's no need to worry about the trend changing. If you can explain what the trend is doing based on fundamentals, then when fundamentals change, then that's when you can anticipate a trend in the trend. In this case, we are saying the trend or fundamentals are still pointing to a lower dollar, a stronger dollar. That means this is going to likely continue going to be a downtrend until something changes dramatically. So In that case, if we have pullbacks, if we have the market going higher from where it is, then that only creates an opportunity for us to look for shorting opportunities in the markets. Okay, let's talk about oil. A very hot topic today and yesterday. So we all know that oil prices have increased both locally and globally, and this is the trend that we are seeing here. So let's dive deeper into why oil prices are going up, because this is Friday, Thursday, Friday, Thursday, Wednesday, Tuesday. This is Monday. So from Monday, we've gone from around $83 per barrel all the way now we're at 93. So we've increased by 10, almost $10. Yeah. So again, why are oil prices going up is the next question that we need to be answering. So before we get, and this, I think this makes a clearer examples why you need fundamentals to back your movement in terms of technical. So we all know this happening here. So let's just try and explain this with the fundamentals first, then we go back to the technicals. So here it's saying oil prices remain well supported. I see Brent trading at $92 per barrel in the early morning of the trading day. Yeah. Okay. So the International Energy ICA in its latest monthly oil market report warned about the market tightening significantly over the remainder of the year due to the ongoing OPEC plus oil supply cuts. So remember, Russia and I think Saudi Arabia have been cutting production, and this is sort of squeezing supply aggressively, and that's why we're having these prices that are increasing. So here it's saying the ICA estimates that the global oil inventories fell by 76.3 million barrels over August, taking inventories to their lowest in 13 months. So you're seeing here inventories, that is storages for this oil being the lowest they've ever been in the past 13 months. This is more than a year. Yeah, and that's what's driving oil prices up. It's the fact that the guys supplying the oil, they've reduced their production and they're storing less oil now for sale, and that's having an impact on prices. But you won't say that this has to be tied in with the demand story. Yeah. Meanwhile, we'll explain that. Meanwhile, Russian exports fell by 150,000 barrels month on month to 7.2 million barrels in August. Yeah. As demand for the IES still be, as for demand, the IES still believes that it will grow to 2.2 million barrels per day this year. It will grow by that much. So supply is reducing, demand is increasing. Yeah, and that's what's affecting the dynamics in oil prices. However, demand growth in 2024 is expected to slow to around 1 million barrels a day, with expectations of weaker GDP growth. Okay, so there's our answer. Supply is being reduced while demand is somewhat improving towards the end of the year, and this is causing on our uptrend. Now, in this case, you'll be asking yourself, what is the likely scenario that you have a change in the trend? If somehow the US manages to convince, they're saying increase political pressure. So if the US manages to convince some of these players to stop doing what they're doing, or at least have a better solution, then it might change what we're currently seeing. So that sets a theme for us to use, or a thesis for us to say that oil is in an uptrend, and it has finally broken this trend that we've had here. Yeah, so you remember oil has been ranging from almost January, actually October. We've just been in this range between 87 and 71. Now finally we've gone higher. So what will I be looking for? Again, you don't attempt to chase prices, even if you're attempting to profit. So you can wait for pullbacks along this trend, and it's good to look at the daily chart for oil so that you have a clear, well-focused trades. Yeah. So you can look for pullbacks and then opportunities to go long. How far is it going to go? I think for now we can focus on round numbers, and the next round number I'm seeing is 95, and then the next round number after that is 100. So first target should be at 95. In case we get all the way to 95, and $5 per barrel, which is very close, and that should act as some resistance, because remember, round numbers are usually good for psychological points for traders to either exit positions if they profit, things like that. So that's one thing to keep an eye on. Hello Sam, is it possible your market outlook series to be packaged in a single unit? Yeah, I think we'll discuss that with the team, and then we see if we can have just so that, because most of the times we have, yes, we are doing the market analysis, but at the same time we're also learning a bit about fundamentals, and you realize that fundamentals isn't just going to a chart or to a forex factory calendar and just looking at whether it's green or red. You have to have more context behind it before you make a decision. Case in point, yesterday, yeah, interest rates came in higher, but the euro dropped instead of rising. So context is important when you're interpreting fundamentals. You don't just go to it because it's saying actual greater than forecast by, or it's likely to go up. Yeah. So I'll have a discussion with the team, and then see if it's possible to have it in a separate list. And it's also good to keep track, because you can look at what we said last week, and if it's happened this week. Case in point, when you were talking about Nasdaq last week, yeah, we said that this thing is going to be an uptrend because companies are showing resilience, and it's likely going to support despite the fact that you are raising interest rates. So it's very risky to try and say the market is going to crash, because Nasdaq and US 500 are the market, the US market, and because the US market is showing resilience, the chances are we will just see this trending higher. And we said unless we go past this trend line, because I remember we drew this trend line last Friday, unless we go past that trend line, your definition of this is still an uptrend. Yeah, so unless we show now here, it's going to be a bit tricky, but unless we show significant movement past these levels that we have plotted, then we're still going to look at it as, number one, okay, there are two scenarios here. Either we continue going higher or we range within this point. Yeah, I highly doubt that there is a justifiable reason for us to see the Nasdaq going lower. Yes, we have Apple and their devices and the issues with China. So Apple itself has dropped a bit, but you see it's finding support. So the share price for Apple is finding support. So this should hold. And if it goes lower, maybe there's worse of news that comes in later in the week. Yeah. Okay. So having said that, thanks for attending today's session. Expectations for the week: hawkish Fed. That means strong dollar. That means trends are likely going to continue the way they are. That means use your technical analysis to know where to follow this trend through. Yeah. Having said that, oh yeah, one more thing is USD JPY. So here they were saying, let's talk about USD JPY. Remember, we still have our zone. Yeah, last Monday it gapped. Now it's finally filled that gap. But remember, we still have our zone. I think it was 140. We marked it at somewhere. Let me see. Just a minute. Yeah, it was 148, 150. Yeah. We've marked these areas because you expect if prices go too high for USD JPY, the Bank of Japan might start intervening. That means they might start actively participating in the markets to push this trend lower. Yeah. Last time they did it here, when it reached 150, they started buying JPY. That means you are shorting or selling USD JPY, and prices started going down. Yeah. This time, if the currency goes back to this point, what's the likelihood of them doing that again? Probably there's a very high likelihood they're going to, but we will monitor the balance sheets for the banks to see, for the BOJ to see if it's actually the case. Anyways, that's that. So the only uptrend I wouldn't be interested in is the one for USD JPY, because it's very tricky. This is the only uptrend I wouldn't be wanting to follow, but the others are pretty okay. So you can try and use the other ones to trade the strong dollar. Having said that, thanks so much for attending today's session. It's always a pleasure to have you guys and discussions. And it's also an opportunity for me to actually do my analysis for the morning. Only that now I do it on the live. That is it, Michigan. Yeah, this one. So expectation, it's going to improve. We already have reasons to believe a strong dollar. So in the event it comes in weaker than expected, don't expect a huge weakening in the dollar. Yeah. In the event you find that it's lower than expected, that means yes, we'll have maybe, for example, now when it comes in line with expectations, fine, we'll continue the trend. When it comes higher than expected, well, that's good for the trend still. The only scenario that will be confusing is what if this comes in lower than negative 9.9? In that case, remember the prevailing theme is already set, and the prevailing theme is next week we're expecting hawkish comments or remarks from the Fed. That means, for example, like this, we can have a temporary push up and then it continues going low. Same thing for gold, because I've seen even gold wants to really rally up. Yeah. If we see data that is sort of implying some weakness in the dollar, then this might continue going up, but that only gives us more reasons to look for sells to continue going down. Okay. Can you kindly, I posted Zoom sessions. I think if you've DM'd me on Twitter, I have posted them. I can't access them directly because I'm using, it's sort of a small process to do that. So, or you can request from the FXPesa official handles, just inbox and just ask for the Zoom sessions, or you can just inbox me personally on Twitter and I will share. I think I shared the guys who requested them last week. So having said that, thanks for attending and see you all in the next market snapshot series. Next week, we might have an interesting video about fundamental analysis, and I'll try to cover this part separately on YouTube, the Monday 8 o'clock lesson. So for the rest of us, have a lovely week, and you can always rewind the video and then just play it through carefully so that you get all the points. Because if I do a summary, I will skip a lot of important points. So you can just rewind the video and then do that. Anyways, thanks for attending and see you all in the next stream.